No one knows how many dollars are in existence today. And so actually the whole point of the blockchain technology is for there to be a way where scarce units, which are transferable, can be known down to the last token, the very last unit, exactly how many there are. Because if you can know that, what does that prevent? Secret inflation, unknowable inflation, like quantitative easing to the 1,000. We don't know how many dollars there are. It makes that not possible.
That's digital currency expert and controversial crypto celeb Amanda B. Johnson. Today on Your Money, Your Wealth, she answers the questions so many of us are asking. What are cryptocurrencies? What's a blockchain? Is Bitcoin safe? Why is Bitcoin so volatile? Should I own any cryptocurrency? Can cryptocurrency actually prevent secret inflation? Plus, how trading Bitcoin could ruin your mental health, and 9 strategies to retire this year so you'll have time to ponder whether or not you've made it in America. And what the heck is Billy Rock? Let's find out today on Your Money, Your Wealth. Here are Joe Anderson, CFP, and Big Al Clopine, CPA.
Have an interesting show. The big rave around town is cryptocurrencies.
Well, it is, Joe, and it's like it's kind of, what would you say, probably the Wild West right now. It's in the early days. You've heard of Bitcoin, and it turns out there's many currencies, not just Bitcoin.
Well, you know what I'm finding out is that Bitcoin is like Kleenex.
Yes.
You know what I mean? Kleenex is the name brand.
Right.
But you can get any type of tissue.
It's like a Xerox machine is made by HP.
Yes, right? Hey, Bitcoin. Well, then, we're going to talk to Amanda Johnson a little bit later in the show, and she works with Dash,
right?
Which is
another
digital cash.
It's like Bitcoin. It's just a different currency.
Yeah, there's hundreds of these cryptocurrencies. So we're going to try to break things down. To be honest with you, I'm really...
You're not an expert?
Not at all. Not really into it. Not into it at all.
Yeah.
I think it's interesting.
Yeah.
I think we're seeing a ton of volatility.
Well, we are.
I like the technology. I think the blockchain is definitely the future, but I don't know. Am I going to bet my overall livelihood on a cryptocurrency? But some people are, man. It's crazy.
I know that is true. I actually.
And I'm not going to say a word about it because whatever it's trading at today, in 5 minutes from now, it's going to be trading something else, and then I'm either going to look like an idiot or a genius. So it's like, all right, well, here, do what you want to do with your money.
Know what it reminds me, Joe, a little bit is the .com period, which was there would be 50 companies all working on the same solution, and they all got funded from VCs, and they're all trying to be the winner, and one made it and 49 failed, and hence the .com bust. And I don't know what's going to happen with this. Nobody knows, but there does, in my opinion, there seem to be some parallels here.
So there's hundreds of cryptocurrencies.
Right, and which one do you
invest? All right, so I'm going to go with Dash.
Yeah.
I've never heard of Dash until I met Amanda B. Johnson. And so now I put 10 grand in Dash.
Yeah.
Well, what doesn't make any sense to me. I don't think I would ever want to do that.
It's
such a speculative play.
Yeah, I think it would be prudent for many, maybe even most people, to just let's just see what happens for a while.
I don't know. There was something in, I don't know if it was the Wall Street Journal or Washington Post or something like that. This one headline was, everyone's getting rich.
Yeah.
And so it's that whole fear of missing out.
Right.
And, this guy bought $400,000 of Bitcoin at a very low price.
Yeah.
And now he's got hundreds of millions. And he's in his 30s.
Right.
He's already messed up, right? I mean, to have that type of, I guess, luck that early, the article he's kind of, he's a little off the charts. But
if it's the guy that I'm thinking of, and it may be, there was somebody that lost like $44 billion.
$44 billion?
I know. I had to look at it like 6 times. Billion.
In Bitcoin?
Yeah.
How could you lose? There's not that many coins, is there?
I don't know how all this works. I just know that Bitcoin was over 18,000 at one point, and
that's where
10 or 12. I mean, it depends on the hour. It depends upon the day.
Right.
I mean, last we checked. I mean, by the time you listen to this, it could be whatever.
Right. So anyway, we'll try to break that down for you. We got Big Al's list. We can talk, all sorts of good stuff. That's how prepared I am. Just FYI.
Really?
Well, you got a bunch of stuff.
I do.
All right.
I do. I think I want to start a little bit lighter.
Oh, because we get really heavy on this show.
I don't know. I mean, I could jump right into taxes, but I don't really
feel like it? Good.
Not really.
All right.
Not right off the bat.
Sure.
So anyway, there's this new study. It's called "Making It in America,"
All right.
and it was a survey put out by Thermosoft, of all things, which is a company.
Thermosoft.
I'm not sure why they did this study, but it's an interesting study.
Isn't that a thermos?
I don't know. Could be. So anyway, Joe, here's the thing: is they asked people what.
Where do you like to camp?
No. do you like your beverages hot or cold? We've got thermoses for both. They asked people, "Have you made it?" Right, which is kind of a broad term. And then they ask, "Have you made it? Yes or no?" And what is "have you made it"? What does that mean to you? In other words, what do you think people thought was the most important thing to look at as to whether they've made it?
All right. I would say that most people are still striving to make it, even though they might have already made it. I think the people that said, "Yeah, I made it," I think they might have some problems.
Well, let me ask it a different way. If they haven't made it, what's their definition of having made it? What do you think?
I would say happiness.
Well, that's not on the list.
Well, because it's by it's by a thermos company.
Well, I'll give you the answer. 67% said they want more income.
Okay.
22% that said they want a dream job, which I guess could equate to happiness. I suppose having more income you'd be happy about that.
Sure.
7% said they wanted better relationships or improve their family relationships,
Happiness.
whatever that may be. Yeah. Right. And 7% want respect. They want recognition. They're not getting the recognition. And so then they asked people, they kind of said, well, how much do you need to make to actually make it? And so the average, and this is just kind of an average of everybody, but what they came up with was that the average that people are making now is $57,000, and the amount that they need to make to have made it is $147,000. $147,000.
Where did they come up with that number?
That's just the 2,000 people that when the 67% of those that said higher income was the most important characteristic. It's like, what are you making now? How much do you want to make? So those are the numbers. So 147,000 was the average. Although it's probably skewed because I think 2% of the people wanted over 10 million.
Oh my God.
But anyway, I digress. I want to go over some of these other things. So they talked about a lot of things to make it. And so they have kind of where people are at now on average and where they want to be. Mm-hmm. So on average, they were single. And on average, they want to be married.
Okay.
So single, want to be married.
And married people wanted to be single.
They only ask single people, probably. On average, and this is probably young people, they had no kids, but they wanted two.
Oh.
You've made it when you've had two kids.
Okay.
So I'm married with two kids.
Oh, Big Al, you made it.
There.
And you make 10 million.
They have, best friends. They have 3. They want 4.
Oh, of course.
They need one more.
Yeah.
Joe, will you be my fourth one?
Yeah, you don't want to have a third wheel. You need a foursome in golf. You need a buddy in your back seat when you drive.
Education. They tended to have bachelor's degrees, and they thought that was perfect. So they're already there. They made it on education. Income is the 57,000 to 147. Hours worked, on average, 34 hours per week. They want to work 31. Working too much.
I put that in 2 days.
30. When's the last time we did a 31?
31? What's 34? Are they a barista at Starbucks?
Commute time is 17 minutes, and they want only 10.
Oh, of course.
So they
I want to work 31 hours.
City.
I only want to drive 10 minutes. I want 4 friends, not 3.
They work at an office. They want to work at home.
Of course they do.
Yeah. Time off, they get 2.8 weeks. They want 5.3.
Oh, this is like really upsetting me right now.
Travel, they want 3 trips a year, and they're already doing it. So there's no difference there. House value, their houses are worth $248,000, but they want the one that's worth $461,000. And the car, they're driving $15,000 cars on average, and they want a $41,000 car. So there you go. Those are some of your definitions of making it.
Oh, that was like really super annoying.
Well, now here's another way to consider if you've made it. It's where you live.
Okay.
So what do you think the 5 top states? In other words, if you've made it, you would probably move to one of these states.
States or cities?
States.
I don't know. California.
California's number 5. Very good.
New York.
New York's number 1.
All right.
Very good.
Number 2. Massachusetts.
No.
Florida.
Yes, Florida's number 2.
All right. Arizona.
Nope. Good guess.
Minnesota.
No, but that's a good guess too if you like winter.
Cold as all get out.
Anyway, think mountains.
Oh, Montana? Colorado?
Colorado.
Okay.
And that's the third one. Fourth one, I don't quite understand, and I apologize if you're from Texas. But
I love Texas. Can't beat Texas.
But if you want to go to a foreign country, if you maybe making it as getting out of the U.S., what do you think the top foreign countries are that people want to move to?
Let's see. Australia.
Good guess. Nope.
All right.
They're mostly in Europe.
Okay.
I'll give you that clue.
European countries.
Mostly. 4 out of 5.
Right there. I got it. London.
That's a city.
What would you say? Country?
Yeah.
Oh. Britain?
Yes. England's one of them.
Okay. Germany?
No.
Russia. This is awful. Let's just go.
Think here, let me give you some
I don't know.
clues.
I don't travel abroad, Al.
Think Italian food.
Okay, Italy.
Right.
Well,
Number
love
1.
Chile. Let's go
Think
to
about,
South America.
South of France beaches.
Oh, yeah.
France, number 2. England, you got that, number 3. Spain, number 4. And more close to home, Canada, number 5.
So people think they've made it in America if they can retire in Europe. Interesting. So then the question is, how do you make it? The problem with your current advisor or stockbroker is you're probably only getting one small sliver of the entire retirement story to make it. So chances are you're missing the most significant pieces of the retirement puzzle. In order to retire successfully and comfortably, to truly make it, you need the whole story and everything needs to work together. You can see that with our personalized assessment. There's no cost or obligation, so you've got nothing to lose. In this customized face-to-face meeting, you'll discover concrete steps to mitigate your risk, simple strategies to convert your savings into income in retirement, how to avoid the retirement tax trap that could needlessly cost you tens of thousands of dollars in taxes, penalties, and fees, how to protect everything you've worked for from the surprising cost of healthcare, Medicare, and long-term care, plus how to avoid the simple retirement planning mistakes that could cost you thousands. This analysis is ideally suited for people who are recently retired or retiring in the next 5 to 10 years. Now, if you learn just one thing in this meeting, it could change everything about your retirement. Get your free retirement analysis by calling 888-994-6257. That's 888-994-6257. Don't leave anything to chance. Call right now, 888-994-6257.
So here was a tweet. Do you tweet now?
No, I don't.
You got to get a Twitter handle.
I don't.
Big Al.
I don't tweet.
That's your handle.
Big Al.
Yeah.
I should.
You got to get the mustache back too, brother. Got to get it back.
All right, I'll grow it back. Maybe sometime this year.
Well, it's winter.
Well,
this is a perfect time for the
yeah.
Big Al stash.
Well, I'm going on vacation in February to Chile, so
if you don't have a big
mustache
big Chile mustache,
I should start it before I go. Right?
I think so. Well, it'll probably take you 3 days to get a big caterpillar.
Who knows? Maybe I don't
know. Bitcoin low key may be depressed today. Twitter used on Wednesday. So this came out from Market Watch.
Okay.
January 18th. So just a couple days ago.
Yeah.
We're seeing some fluctuations in Bitcoin.
We have.
Yeah, boy. So Robert Shiller, you know who he is, right?
Sure.
Nobel Prize winning economist, professor at Yale University. It's called
You
Cryptocurrency Craze, a marvelous study of human behavior. It's providing valuable information about how millions of human brains process in the case of public acceptance, imagination, and innovation surrounding cryptocurrencies. Mm-hmm. So everyone's just kind of glued into this cryptocurrency craze.
Right.
And just not necessarily buying into it, but I think just looking at the human behavior. And you and I have been talking about cryptocurrencies more in the last couple of months than I still am confused on what.
Well, that's why we're going to
works.
have Amanda Johnson on here shortly.
But there's studies now, and there's some concern, of course, in the world about sudden large losses of wealth affect mental health. So when studying the effects of the 2008 market crash, researchers at College of William & Mary and Johns Hopkins found that those who lost wealth had increased feelings of depression and used antidepressant drugs. Imagine that. So you just lost $400,000. Woo! I'm not going to be depressed. I'm going to be fired up.
I can make it back.
The effects were more significant among those who had high levels of stock holdings before the crash. So what they're saying now, because of how volatile these cryptocurrencies are, and there's this big craze, and I mean, dude, Bitcoin was up, 20,000? Yeah. It's high. It's almost lost half its value in a month.
It was at least 18, and I know at one point this week it was down to 10,000.
One famous study from 1978 compared 22 major lottery winners with 29 paralyzed accident victims.
Okay.
As well as in a control group. The researchers from the University of Massachusetts in Northwestern found that the lottery winners were no happier than the control group.
Really?
So these 29 paralyzed accident victims versus 22 lottery winners.
And they were no happier.
No, and no happier than they were with themselves in the past. They also took less pleasure in mundane events. The accident victims were only slightly unhappier than the control group when asked about everyday tasks.
Okay, interesting. So money does not buy you love, right? And happiness.
You know, that was...
I think we heard that a long time ago.
Those who have lost nearly everything can find happiness, said...
So what you're telling me is happiness is kind of an internal job.
Yeah, author Janine Roth lost her life savings in the Bernie Madoff scandal. She said she was able to recover, though she sometimes feels angry about the past. That was one of the best things that ever happened to me in my life, she told Oprah in a recent interview. I had to focus on what I had, now what I didn't have. I had to bring my mind back from the terror of starting to focus on what was good. So I guess some bad things, I guess you can make lemonade
out of the lemons. Yeah, I think you can. I can recall my reaction of the Great Recession. And I had some money in the stock market, but most of my investments at that time were real estate. And I watched those go way down. And it was tough. It was really tough. I was, as I told you, Joe, I was thinking, well, I couldn't fully retire, but I thought maybe I can semi-retire and work part-time.
Right.
And that went out the window with the real estate. But I'll tell you something that, in my opinion, a great thing that happened with the Great Recession is it refocused values, our sense of values. I think we were pretty focused anyway on family and things like that, but it even made it stronger. It's like, do we really need to buy these things? And that's not really what makes you happy. We're kind of forced to spend less for a while.
Sure.
And I think that was a really good exercise.
But the market is going to turn. The cryptocurrencies are either going to take off or blow up. But I think you have to be prepared for that and have a strategy to know what to do when it happens.
Right.
Instead of being in shock and going into depression. Right, you have to have a defensive strategy to say, all right, if the market blows up, if it's down 20, 30, 40%, your $1 million is now worth $600,000. What are you going to do? Are you going to freak out? Or are you going to, say, all right, well, here, this is just common market behavior, and making sure that you continue to save into your 401k plans. Do not sell out of the overall markets. Right? Because there's going to be a time where you're going to say and you're going to think and you're going to hear this is like, this time it's different. This time it's different. It's not going to be different. The situation, or the event might be a little bit different.
But not the investments.
Right? So you just want to make sure that you have a strategy in place, and you want to make sure that you're taking a look at your overall portfolio right now to say, if I lose 40%, 30%, 20%, what is the strategy? What am I going to do? How disciplined am I going to be? Because the most successful investors are extremely disciplined. They're intelligent in regards to their overall money. Now, Bitcoin and Dash and all these cryptocurrencies, it's a lot of fun to watch. It's a lot of fun to understand and get educated in some instances. I'm not really that interested, but I'm saying this because we have a guest next segment that I want to promote, and her name is Susan B. Johnson.
Amanda
Susan B. Anthony is a coin.
I know exactly what you're thinking. That's pretty good. You combine the coin and Johnson.
Yes. Anyway, all right. So let's stick around for that. Al and I are going to have some fun. I'm probably going to sound like a complete moron, but there's nothing new there.
Do you have that plan in place for what happens if the market blows up? Do you have an overall strategy that takes into account income, risks, assets, inflation, Social Security, and taxes? You probably believe that you don't have any control over paying taxes, right? But it's not true. In fact, you've got more control over how much you pay in taxes in retirement than at any other time in your life. But your stockbroker, your financial advisor, even your tax preparer may not understand how to lower your taxes in retirement because that's not their area of expertise. The only way to lower your taxes in retirement is by having a forward-looking, tax-efficient strategy. Find out how you can legally pay fewer taxes than ever before with our new personalized tax reduction analysis. In this analysis, you'll discover techniques specifically designed just for you on forward-looking tax strategies to keep more of your hard-earned money in your pocket. There's no cost and no obligation, so you've really got absolutely nothing to lose. Get your complimentary personalized tax reduction analysis by calling 888-994-6257. That's 888-994-6257.
Alan, it's that time of the show.
Yes, and it's always the best part of our show because we have people way more intelligent than us, and today is absolutely no exception. We've got an expert in cryptocurrencies.
Yeah, you and I have been trying to talk about this for the last couple of months.
We can't
and just
even pronounce
butchering.
it. It's Krypton,
What-
crypto.
Yeah, what the hell is this thing, right?
Bitcoin, blockchain.
What?
Chain block.
And I
blockchain?
was like, enough is enough. We are going to get an expert on this program to explain it. So we have Amanda on the line, and she is the expert.
I think so.
And Al is now one of the big follower.
I'm one of her key students because I watched her first 4 videos earlier today.
So Amanda, hey, welcome to the show.
Thank you, Joe. Thank you, Al.
Hey, well, just give our listeners a little bit of a backdrop of your experience, how you became one of the top cryptocurrency females in America from a small town outside of Salt Lake City.
Sure. So I'd come from an abiding interest in money and monetary policy, basically. And so back in 2013, I first heard of cryptocurrency. And I decided to look into it when I heard someone make the compelling case to me that it could become like money one day, like money, like dollars money. And I thought that was interesting, so I looked into it, and I've been writing and speaking about it ever since.
So let's kind of break things down. What the heck is Bitcoin?
Sure.
In real simple terms.
Sure. So Bitcoin was the first cryptocurrency, and a lot of people assumed that it would be like the only one. But what has actually happened in the 9 years since it was created is that many others have been invented. And so what's happening now is there's a sort of competition going on, which is to see which one of these cryptocurrencies actually earns the title of, dare we say, money someday. And that term that you used earlier, blockchain, that is actually the name of the technology that... Do you know what a ledger is, Joe or Al? Like a ledger?
Yes.
I'm an accountant. I got that down cold. I can
What
even
am I saying?
I can even do a handwritten one if you want.
So you guys live and breathe ledgers, so you know exactly what I'm talking about then when I say that a blockchain is just a digital way to do a ledger over the internet where everyone can see the contents of the ledger, and it's the people who run the software of the ledger who make updates to it. So if you have a cryptocurrency wallet, let's say you have a Dash wallet. Dash is my personal favorite. I am the spokesperson for Dash, actually. So if you have a Dash wallet and you want to send me, Amanda, some Dash, you tell your wallet to send me, let's say, $10 worth of Dash. Your phone then sends a ping to someone out in the world who's running the Dash software, meaning they have a copy of the ledger. And their computer will stamp your transaction to me into that digital ledger, and then ping, it appears on my phone in my wallet.
So then do you know how much I have in my wallet, or you just know something appeared in your wallet?
Wow, that is a very good question. So it depends on the cryptocurrency you're talking about. If you're talking about a cryptocurrency which, say, does not offer privacy, like a Bitcoin, for example, I would, in fact, be able to look at a copy of the Bitcoin ledger and look up the transaction you sent me. And yes, I would be able to see the balance of the account. And mind you, you can have numerous accounts within the same wallet. But I would be able to see the balance of the account that you used to send that to me. Now, this is one of the ways Dash differentiates itself from the pack in that Dash has a mechanism within its wallet that says, you know what, I don't want the person I send Dash to be able to see my account balance. So go ahead and obscure that on the blockchain. And so if you had sent me Dash in a private manner, then no, I would not be able to see how much your account held.
So let's back up here because I'm already confused. So the whole basis of cryptocurrency is to decentralize a higher being to be in control. So basically we can trade currency or buy goods and services without a central bank that might have overseen powers and control over the overall currency. So give me an idea of why the blockchain in Bitcoin and all the other coins in Dash, and I believe Dash is another form of coin.
Yes.
So, right, why did it become? What's the whole basis of it?
The basis, and actually you can see this in the white paper that was written by the mysterious person who invented this blockchain technology. His pseudo name is Satoshi Nakamoto. But actually the basis, it doesn't really have to do with centralization or decentralization or any of these sort of buzzwords that you hear thrown around. What it actually has to do with is having a way that a monetary supply can be known. Because Joe, Al, how many dollars are there in existence today? You can tell me, right? How many dollars there are?
No.
I know it's in my wallet, about $4.
Yeah. So no one knows how many dollars are in existence today. Not even Janet Yellen knows. And so actually the whole point of the blockchain technology is for there to be a way where scarce units, which are transferable, can be known down to the last token, the very last unit, exactly how many there are. Because if you can know that, what does that prevent? Secret inflation, unknowable inflation, like quantitative easing to the, 1,000, we don't know how many dollars there are. It makes that not possible.
And so that's all about making money transparent, it sounds like.
Yes.
So I went on Wikipedia, which we all know is the source for everything you'd want to know.
Right, it's like WebMD.
Yeah. And they said they came up with 44 active cryptocurrencies as of today. And there's probably lots more than that, but there's 44 that they've listed. So how in the heck would a person know which one to pick or what's going to be the winner? Or to me, it seems pretty confusing.
Well, that was the exact question that I was asking myself starting probably 2 years ago. So 2 years ago, I was the host of a daily cryptocurrency news show on YouTube called The Daily Decrypt. And as I'm reporting on these different competitors in the space day after day, I thought exactly what you just asked me, which is, well, which one should I buy? Certainly, they have to differ from each other in some way. How can I tell for myself which is better than which one? And so that is basically what I've spent the last actually 2 to 3 years doing, which is coming up with some metrics that I could use for myself, for my own personal investment, to try to make predictions of, okay, because of mechanism A, this cryptocurrency will likely fare better than this other cryptocurrency. And so my job title makes it obvious which cryptocurrency I think will become money in the long run. And so, that's a question that each investor has to ask himself, just like with anything.
So, now let me ask you another question. How do people know, I guess whichever currency they pick, but how do they know this is safe? It's secure. There's not going to be mistakes. There's not going to be issues, or it's not the software is going to blow up.
Right,
and
someone's going to hack into my wallet.
Right.
Yeah. How is all this being safeguarded?
Right. So when I first started looking into that, I thought to myself, all right, so the first thing we can know about the computer code that any given cryptocurrency network is reliant upon is that all of them, or rather the good ones, are open source. So that means that any code that is in there is at least knowable, right? So if it's knowable, the next question in determining security is, okay, as you said, can it be hacked? Or, to use your more flavorful term, can the software blow up? So in that case, a prime example of what we're doing in Dash is we have offered a sizable bug bounty through a company called BugCrowd. And we're basically offering substantial sums, actually in dollars. They don't even have to take, Dash. In dollars, we're basically hiring white hat hackers, which means people who, they don't want to mess you up. They just want to find your bugs if you have them. And we've had that bounty program going for 6 months with, no vulnerabilities found yet, no major vulnerabilities. But beyond that, fellas, we also have to realize that any hacker in this world who could claim, hey, I was the one who took down whatever XYZ coin, that would make him like the coolest hacker ever. And so you've got to know this stuff is being tested all day and night. There are already people trying to break these systems all day and night. So for every day that goes by and a cryptocurrency is not broken, like that's really the best way to gauge its security.
But there is really no intrinsic value to a cryptocurrency or any, gold for that matter. It doesn't produce anything. It's a speculative type of investment play at this point.
Well, if you buy it as an investment,
right? Bitcoin, for instance, they're only going to have 25 million coins, and then it stops at that. Or how many coins is Dash going to have, or whatever pot coin?
Oh, you read the list.
So it stops at some point, doesn't it?
It does. Well, the way the code is currently written, it stops. Now, here's where things get interesting, fellas, because that code is open source, as I had said before, which means that it can be changed by humans. So here is where, in the next handful of years, people are going to start realizing that these cryptocurrency networks, it's about trust, meaning a customer needs to be able to trust that the people running software for a given network will not change the promises that they've made. Because yes, Bitcoin's current code, for example, it says 21 million coins and no more will be created. But guess what? The network science says that if 51% of the people running Bitcoin's network update their software to lift that coin cap, it can be done. And so we're going to go from this realm where we are now, which is, it seems all kind of like, magic and mathematical and, based on code in the cloud. People are going to begin to realize that, it's still just human beings behind these networks. And so we are going to only want to use a currency that's run by people who we believe are trustworthy.
Cryptocurrencies are taking a volatile spin, and markets are at all-time highs, at least at the time of this recording. But what's going to happen next? Whatever you hear in the media, you have to understand your current overall situation and make sure that you've got a game plan moving forward so that you can do all the things that you want to do in retirement. If you want a successful retirement, what can you learn from people who have already retired successfully? As it turns out, it's probably a lot. One thing's for sure, retiring successfully today is never an accident. A single common denominator is that they all have a plan, a sound, thoughtful retirement game plan that addresses everything: income, risk, assets, inflation, taxes, Social Security, healthcare, Medicare, long-term care, and so much more. Let us prove to you how easy it is to get started with our financial assessment. We've helped hundreds of people right here in Southern California, and we can help you too. It doesn't cost you a dime for your initial analysis, so you've got nothing to lose. There's no analysis paralysis. Take advantage of this free customized analysis by calling 888-994-6257. That's 888-994-6257. We'd love to do this for everyone, but with the extensive amount of work that goes into each customized analysis, we simply can't do it. So this is first come, first served. Here's your chance. Call right now, 888-994-6257. That number again is 888-994-6257. 6257.
Welcome back to the show. Show's called Your Money, Your Wealth. Joe Anderson here, certified financial planner, Big Al Clopine. We're talking to Amanda Johnson about cryptocurrencies. So it's a belief system. So there's got to be belief that there's going to be value for the particular coin, and that's why it's significantly volatile. And so we're seeing these coins, the volatility on them is something else.
Sure. And volatility is also, I think, in part caused by just how small the cryptocurrency market is right now compared to other markets. We see headlines of, these big astronomical gains or big astronomical losses. So it sounds like, that's a huge market. But compared to, the market capitalization of a major national currency like dollar or ruble or euro, it's still relatively small, and so it doesn't take very big buys or very big sells to make those kinds of big moves.
Can you just explain it a couple of minutes? Because I'm still I'm making myself look like a complete moron.
You need to watch her videos.
Well, we got some minutes here. Maybe she could give us a 5-minute lesson on just the simplest form, ABC, of what a cryptocurrency is, the blockchain, the pros and cons to them, and then what the future might hold.
Sure. So a blockchain is a digital ledger that never gets updated but only added to. Meaning, if we're looking at the Dash blockchain and I send you some Dash, it's not so much that my account balance gets, erased and then updated. If we're imagining it being written in pencil on paper, my account balance doesn't get erased, but rather just a new page, a brand new page is added to the ledger that reflects -1 Amanda, +1 Joe. And so the blockchain is, if we were to consider every new page in the ledger, if instead of calling it a page, we called it a block. And it's after we added enough pages, instead of calling it a stack of pages, we called it a chain of blocks. That's what a blockchain is. It's just a continually growing, continually updated digital ledger. And now, how does it get updates made to it? Who has the right to make those updates? When do they get to make the updates? I don't know if we can fit that into this segment, but if I may, I made a short video series that talks about precisely this. It can be watched in under an hour. It's kind of snappy. It's called Dash School, and it's on YouTube. And it describes exactly what you're asking about, which is, what the heck is this, weird sounding technology, and why should I trust that it isn't just, a big tulipy Ponzi, scam?
So the blockchain technology is the key, and then all of the other cryptocurrencies, such as, there's hundreds of them, are utilizing the blockchain technology, the ledger system that can never be erased. It's just getting added to. So it's there forever and for everyone to see, to create some transparency so we know what's out there. And then the cryptocurrencies are using that blockchain technology to create their currencies to get it to the public?
Right. So each cryptocurrency runs on its own blockchain. So there's a Dash blockchain, which is different from the Bitcoin blockchain, which is different from the Dogecoin blockchain. They each have their own.
So what do you think is going to happen in the future? It doesn't seem to me like there could be hundreds of these currencies forever. I mean, isn't there going to be some? Don't you think there'll just be a few winners, or maybe one winner? What's your thought of the future?
I do think precisely that. I think that we are currently in this sort of blooming stage where, as I heard someone put it years ago, when these more and more coins started coming out, I heard someone say, "Let 1,000 flowers bloom." Because at first I was thinking to myself, this is so silly. Why are these new coins being created? We should just stick with the one Bitcoin, and anything that has been created after Bitcoin is just detracting from Bitcoin's network effect. And someone said to me, "Let 1,000 flowers bloom." And I realized that's the stage we're in now, where, by the way, anyone can start a cryptocurrency They just need to convince other people to run the software with them, because it's a network thing. If only one person is running the cryptocurrency software, well, that's not much of a network, is it? So the Dash network, for example, has 4,800 computers around the world run by people who decided to run them. And anyone can start one of these. And so, yes, while many of the coins out there, maybe even most of the coins, are just kind of crappy, we're in the stage where as many flowers as can bloom will. And then we will enter, just like you said, a stage where things start getting weeded out. And that weeding out process will weed out, I think, probably most of them. And yes, we will likely end up with, a few coins, or maybe even one coin that functions as a, if I may, a sort of like gold 2.0, dare I say. And then perhaps other currencies begin being issued around that, with that coin being the backing. Being the reserve.
I think it all has to deal with the merchant, though, too, doesn't it? I mean, if I have something that
they
I think that I can,
it.
they got to accept it. So if I have a wallet full of Dash, and
do you take Dash
or no, we just take Visa. Damn it!
But I'm just thinking out loud. So there's Visa, there's MasterCard, right? There's American Express. So I think you can have more than one, but they have to be universally accepted.
And that is exactly what needs to happen right now within the crypto sphere, and to some extent is happening. If I may give, because if not, then they really are completely worthless, are they not? If I can't buy something with my Dash, it truly is worthless. And so that is what we are working on full force right now. If you were to go to a website like discover-.com, you would find that we are closing in on about 650 merchants around the world accepting Dash. And our primary goal is just to increase that number, because that is the only way that Dash will be useful, is if you can buy something with it.
Sure, and so that needs to be probably 100 million merchants.
Yeah, it does. But how do you get Dash coins? Where do you buy them?
How do they mined?
I don't. Where do you put money?
Yeah, the easiest way is through online exchanges. So I believe that the exchange, they're based in Florida, I think. They are uphold.com. Uphold.com recently started selling Dash for credit card. I think that's probably one of the easier ways. Yeah.
So if I were just to buy any type of cryptocurrency, what exchange would I go to?
Yeah, so it depends on what you want to buy it with. So because each exchange accepts different forms of payment. Some accept a credit card, like I had just said about Uphold. Others only accept a bank wire. And still others only accept cryptocurrencies themselves. And so, for example, like what kind of payment method are you talking about?
Well, I don't know. I have cash. I want to.
I want to put it in a machine and get some Dash.
Or I don't know. Or a brokerage account. So I want to have a diversified portfolio, and maybe I want 1% of my portfolio in cryptocurrencies, because I have 2% in gold, and I have some, natural resources, and I have stocks and bonds and real estate. Well, maybe I want to diversify into cryptocurrencies. How would I go about doing that?
Yeah, I mean, that would be your uphold.com. In terms of a brokerage who handles the buy and maybe keeps the cryptocurrency for you, I'm not quite sure. But the thing about cryptocurrency is that you can possess it yourself. So that's one of the more novel things about it. Whereas if you're going to have a lot in dollars, a lot of people would say, hey, I want that sitting in a bank account. I don't necessarily want that in cash, in my house. It's a different case with cryptocurrency in that there is no cost to store it yourself. You don't have to leave it with a broker or a website if you don't want to. And in fact, it's recommended that you don't, because it's kind of the Wild West right now, right? And so if I'm a hacker and I'm out there looking to steal as much cryptocurrency as I can, where do I look first? I look to these exchanges because they're these huge honeypots, right? And so it's actually better to keep your coins yourself, and you can keep them on your phone. You can keep them on your desktop computer, and you just buy them on a site like uphold.com or wallofcoins.com, or if you want to, or even like coinbase.com. They don't sell Dash yet, but they do sell some cryptocurrencies there as well.
So if I lose my phone, I'm pretty much...
Well, it's the same as
You
if you
two
lose
just
your
keep
wallet.
asking all the good questions. So what if you lose your phone? That is the perfect question to ask, and that is why when you create a wallet, you press the little button that says back up this wallet. It shows you 12 words. You write them down on a piece of paper.
And then I'm going to lose the paper, Amanda. I swear to God. All these
Put
passwords.
it in your safe.
What's my mom's maiden name? What's my first dog treat that I gave it when I was 12?
You don't know your mom's maiden name?
Yeah, it's Anderson. My mother married.
Another
my mother's
Anderson.
maiden name is Anderson. My father's last name was Anderson. So every single time, you're right. What's your mother's maiden name? Anderson. No, her maiden name. I know what her maiden name is. It's Anderson. And no, they weren't related.
Oh,
They
no.
weren't cousins?
I know your mother's maiden name now. I'm going to hack you now.
Oh,
Yes,
my
perfect.
goodness.
Yeah, my first dog was named Muggsy. And my first car was a Pontiac 6000 station wagon LE, 1987, baby
And
blue.
and once you get to 60, you won't remember that anymore. So then it gets tougher. Well,
Amanda, I could talk to you for hours. We've already blown up the clock. Hey, so where did they go to get more information? You got a great YouTube channel. Big Al is your biggest fan. It's like Netflix. It's like 7 minutes long, and then you just get suckered in. And he was in his office for like 4 hours all day.
I watched the first 4. I got hooked, and the next one starts when the first one stops. It's fantastic.
Yeah, so yes, I mean, on YouTube, just type in Amanda B. Johnson, basically. But if I want to tell you that cryptocurrency is super easy to use right now, and I want to give you a website where you can just go, download with the click of a button, clickety-click. But guess what? It's not that easy yet. That's why there's still so much potential profit to be made, because it's still hard and it's still risky to get engaged in right now. So more than anything, I'd actually just encourage you to find a young nerd like me and ask them to show you how to do this stuff in person, because guess what? That's the best way to learn, and that's how I learn.
So
All right. Next time you're in San Diego, you can show
Amanda
us.
B. Well, hey, what does the B stand for in Amanda B?
Like an old sort of internet handle, Billy Rock, actually.
Wow.
Billy Rock. Wow.
Amanda Billy Rock Johnson.
Well,
Got it, fellas.
that's fantastic.
All right, well, there she is, Amanda Billy Rock Johnson, folks, cryptocurrency expert. I'm still confused, but this was I'm getting there.
1,000% more than you
way
did
more.
before this
Way
interview,
more.
right?
Yes.
Okay, I know a bunch more now too, but I wonder about cryptocurrencies and taxes. How does that work if you've got some digital currency in your portfolio? Another important topic for another podcast, because taxes don't stop when your paycheck does. In fact, tapping your retirement nest egg comes with all sorts of new rules and opportunities. Instead of contributing to tax-deferred plans that reduce your taxes, you'll start tapping those savings for income and paying taxes at your regular rate unless you're tapping into a Roth IRA. So as you near retirement, tax planning becomes more important than ever, but you must use a forward-thinking tax strategy, because you've got more control over paying taxes in retirement than you think, actually more so than at any other time in your life. Find out how you can legally pay fewer taxes than ever before with our new personalized tax reduction analysis. In this analysis, you'll discover techniques specifically designed just for you on forward-looking tax strategies to keep more of your hard-earned money in your pocket. There's absolutely no cost and no obligation, so you've got nothing to lose. Get your complimentary tax reduction analysis at 888-994-6257. That's 888-994-6257. Time now for Big Al's List. Every week, Big Al Clopine scours the media to find the best tips, do's and don'ts, mistakes, myths, and advice to improve your overall financial picture in handy bullet point format. This week, 9 strategies for how to retire in 2018.
This comes to us from Emily Brandon, staff writer for U.S. News. And I thought some of our listeners may be retiring this year or thinking about retiring this year or next year. This will still work for next year. But here's some of the things that you have to consider according to this article, and I think she did a pretty good job. Number 1 is set up health insurance. And that's one that sometimes you don't really think about that much because you're employed and your employer pays for health insurance. And realize this, that Medicare, that starts on your 65th birthday, not before. You can sign up for it 3 3 months before your 65th birthday and your 65th birthday month, and 3 months after you turn 65. But if you retire younger than 65, you're going to have to get your own health insurance. And right now, you can usually get it through your state's health insurance exchange, or perhaps purchase it from another source. But you're not going to want to go without health insurance, mainly just because if there's some kind of catastrophic illness, it could wipe out your savings.
Well, I think with retiring early, people have to understand the cost.
Yeah, your costs or your spend is probably going to go up because you got to add health insurance to that.
No, that's what I mean. Your health insurance could cost a couple $1,000 a month.
Easily, right.
So,
right.
now add another $20-some odd $1,000 to your living expenses.
Right. You thought you were spending $75,000. You're really spending $100.
Right.
And that's before because most people, they want to travel more and do things like that when they retire.
And here's the problem with the math. And you and I have done a few financial plans, and
Yes.
we've seen the numbers. And if you're planning on 75, and all of a sudden that number goes to 95 in this instance, in early retirement, you have to be extremely careful of how that money's managed. Because if we see a dip in the overall market, and now you're taking out $20,000, $25,000 additional monies, to cover that health insurance before you bridge the gap to Medicare at 65,
Right.
and you have a downturn and you're taking more money from the portfolio, it gets very, very difficult to get caught up. And you have to really start shopping this, taking a look at it, practicing. Can you live within that parameter of dollar, right? So if you're spending 75, but you can't, because there's another $25,000 of expense, well, now you got to tone your living expense to maybe to $50,000. You have to look at all aspects of this, because if you're going to retire early, your money needs to last that much longer. And if you have a dip in the market earlier, depending on how you're invested, it could hurt you.
Yeah. Now, Joe, if you're relatively healthy, you might want to look at a high deductible plan.
Like an HSA or
HSA, yeah, to lower the premiums, but make sure you've got something just for catastrophic illness. The next couple things, Joe, I think are related, so I kind of want to do them together. Tally your income and create a spending plan. And so here's what this means. It means you got to take a look at what your fixed income sources are. It could be Social Security, maybe your Social Security age, or maybe you're younger, but look at what it's going to be. Look at what pension plans you might have. Maybe you have a rental property, maybe you don't. What are your fixed income sources before you look at your portfolio? Let's start with that, okay? And let's just say that's $50,000. Then look at what you're spending. And I want to spend $100,000. So my fixed income's $50,000. I want to spend $100,000. So I need to get $50,000 from my portfolio. So then you sort of go to your portfolio, and you kind of want to do that math. You kind of want to do that ratio. So if you got $1 million, if you're pulling $50,000 out, that's a 5% distribution rate. That might be a little bit steep. We might recommend, depending upon your age, more like 3 or 3.5 or 4% distribution rate. The younger you are, probably the lower percentage that you want. If the later you retire, like let's say you retire at age 70, you probably could get away with a 5% spending rate, unless your longevity is you think it's going to be really long.
Yeah, it could very well be too.
And so it's that mathematical computation, and you can do that right now. Like let's say you want to retire in 3 years from now. Just do some simple math to see are you on track, and try to make sure that your distribution rate, just how much you need to spend or that you want to spend over and above your fixed income, you divide that into your portfolio and you come up with a percentage. And you kind of want that percentage to be below 4%. Now that's a rule of thumb. There's a lot of exceptions to that, but at least you can find out if you're in the right ballpark.
Sure. I think that rule is only good to see if I'm close.
Yeah, you're not going to use that for your retirement income strategy, but
hopefully you're not.
You shouldn't, because there's a lot more to it than that. But at least you can determine, like for example, if I need $50,000 a year from my portfolio and I've got a $100,000 portfolio,
it's not going to work. Math doesn't
that's a
work.
50% distribution. Another way to think about that is I'm going to have income for 2 years, and now I got to reduce my spending to $50,000 and be living a whole different kind of lifestyle.
Right.
Yeah. The next thing, Joe, would be to look at your 401k. Do you want to keep it in the 401k? Do you want to roll it over to an IRA? A lot of people roll it over to an IRA, but Joe, there's pros and cons in that.
Yeah. If you're retiring early, let's say if I'm separating from service at 55, there's no 10% penalty if I take distributions from my 401k at 55 or older. So you probably don't want to roll it into an IRA, because then you jam yourself up. You can't take the money out until 59.5 without a 10% penalty, unless you use a 72T tax election, which is a little bit cumbersome.
It is, and you may not get
it's
as much income as you want.
Right.
Yeah.
Or if on the other side, if I'm still working, if I'm in my 70s and I'm continuing to work, well, then I definitely don't want to roll it out. I want to get all the money into that 401k if I'm an active participant in a large plan, because then there is no required minimum distribution on that 401k as long as I'm an active participant in the plan. Then my required distribution starts after I separate from service. It starts April 1st the following year. So, there's pros, absolutely huge pros to keep it in your 401k plan. So you don't necessarily want to move it out.
But who should, or what would be?
I think at some point, and to be blunt, everyone should have it in an IRA at one point in their life. I think consolidation is key. I think the rules when it comes to IRAs at death, when it comes to stretch IRAs and inherit IRAs, are more favorable than retirement plans such as 401ks or 403bs. So, you got better investment choices, blah, blah, blah. Right?
Yeah, because you got the whole smorgasbord.
You got the whole spectrum.
401k, you may have the 20 investments, 20 mutual funds that the fund manager picked for you.
Right. And then, but in 401k plans, you have ERISA protection.
You do.
So
that's right. So you got to consider that.
So, but it depends on what you're trying to protect, because IRAs still have that same protection if it came from a 401k, depending on if I'm getting sued, or if it's bankruptcy. So there's different liability coverages. So you just want to understand, all right, well, do you think I'm going to get sued, or do you think I'm going to file bankruptcy? So you just want to take all those things in consideration.
Right. Another thing you may want to do is take a look at your portfolio, and we see lots of mistakes there. We kind of tend to see a couple extremes. We see people that say, Joe, Al, I'm comfortable with the market. It always seems to trend up. I'm all in. And then it's when in retirement and you're pulling money out, the rules work a little bit differently, because if you're taking money out of your IRA, your trust account, your 401k at the same time when the market is correcting, which it hasn't done for a while, by the way, and it will at some point.
But here's what people are doing, man. Our firm manages quite a bit of money. And, and we see a lot of new individuals. And there's so much overconfidence.
There is, especially right now.
Because of the markets are up almost 300% since 2009. And it's like, whoa, look at my rate of return. I'm up 17%. What's your benchmark? What are you doing? Yeah, I love 17, 20% rates of return as well. But you got to be careful.
Yes.
It's like, hey, well, let me load up a little bit more on equities. Like, what? You have to look at the long term here. What are you trying to accomplish? Take the least amount of risk possible to accomplish your goals.
Yeah.
Now, if you're in your 20s, 30s, and 40s, then have a 100% equity portfolio.
Yeah, or 80, 90%, something high.
Sure.
Because you can weather the storms.
Right. But if I'm, now I'm 60s, 70s, I'm looking to retire over the next 5, 10 years, then that's where you have to be a little bit more defensive, in my opinion.
On the other hand, Joe, we see people that don't want any market risk because, well, wait, I'm retiring. I can't afford to have the money go down. And then they're forgetting they're 65 years old and a married couple. There's a 50% chance that one of you is going to live to age 92.
Inflation will eat you alive.
That's 27 years, and that's the average. Half the couples are less. Some are living into their late 90s. And you think about, you're 65 now. In 25 years, do you think there's going to be more medical advances to where we're living even longer? You have to account for that. So you still need some growth because of inflation.
Right. You have to look at all risks associated with what you're trying to accomplish. If I have all my money in cash, I'm still taking on risk. It's inflation risk. If it's sitting in a retirement account all in cash, now I'm getting eaten up by taxes and inflation. But I'm really scared of the overall markets. Well, you have to understand how markets work. Well, what about bonds? Interest rates are low. Well, no, I think there's just a lack of information and education. They just hear what they want to hear, and they don't, and then they only do what's comfortable right now, today. But they're going to regret it 10 years from now.
Right. And Joe, we're almost out of time. I'll just highlight some of the rest. Decide when to claim Social Security. We talked about that a couple segments ago. Look for lower fees. If you have the kind of mutual funds that have very high internal fees, there's probably better alternatives. Strategize to minimize taxes. Look at maybe things like Roth conversions and how you're going to create your income distribution over your retirement to reduce taxes. And then finally, make sure you plan your new lifestyle, because it's not just all about money. It's how you fill your time.
Do you know what's in your retirement future? How can you make sure you're ready for retirement? We've got a guide for that. Visit the white paper section of the Learning Center at yourmoneyyourwealth.com to download our free retirement readiness guide. This guide contains little-known secrets about creating income to last a lifetime, making the most of your investing strategy in retirement, controlling your taxes, and much more. You'll learn 7 plays that'll help you get retirement ready despite all these uncertainties we face. Download the free retirement readiness guide from the white paper section of the Learning Center at yourmoneyyourwealth.com. That's yourmoneyyourwealth.com.
What, you got any final parting thoughts there,
I do. We started the show with a study that was about Americans and their perception of making it. And some, this survey, 2,000 people were surveyed, and some, those that did make it, they were asked the question, then how are you spending your time? So think about it, Joe. What if you made it? What if I made it? What if you made it? What would you do? How would you spend your time?
I don't know, man. That scares me. That's the problem. It's like
it is because we're used to working.
No, I took 2 days off over the holidays, and I'm like, oh my God, jeez, anxiety. I got problems. I got to see a therapist. I got to see Dr. Finkelstein. I got to sit down on that black couch and.
Well, I'm going to help you out because this is what those that made it. This is what they said. So, 28% said they enjoyed spending time with family and friends.
Okay.
Okay.
What did the other 70% want to do?
And I assume there's some overlap. So maybe this was like, what do you enjoy most? I think that was the question. 28%. Yeah, only 72% did not enjoy hanging out.
I hate my family. I hate them.
Anyway, the second highest response was exploring, which I guess means travel.
Okay. Exploring.
23%. 21%, this is you.
All right.
21% is I still want to work.
Yeah.
I don't know what else to do.
I'm going to start another business.
Yeah.
Yeah. I don't know what it's going to be. Cryptocurrency.
So, what are you going to call it?
Golf coin.
Dash 2?
No, golf coin.
Golf
you play
coin?
golf course with these coins at any golf course
coin,
in the
I like
world. Huh? What do you
Okay,
think?
17%.
Think it's got legs?
No, I don't. I'll jump on with Amanda B. Johnson on Dash.
Susan B. Anthony.
Yes. 17% want to relax, and 11% want to help people. Help people in need.
So 90% of people do not want to help anyone. 70% do not want to be with friends and family.
Anyway, there you go.
All
that's the study.
Well, that was a great study.
I think so. It's got colorful pictures. It's really cool.
All right. Have a wonderful weekend, everyone. For Big Al Clopine, my name's Joe Anderson. Show's called Your Money or Wealth. We'll see you next week.
So to recap today's show, to retire this year, all you need to do is set up a health plan, decide when to take Social Security, create a spending plan, adjust your portfolio, have a retirement tax strategy, then decide how to spend all your free time. You'll know you have made it if you have $10 million, 2 kids, a villa in Italy, and only had to work 31 hours a week at Starbucks to get there. Special thanks to our guest, Amanda B. Johnson. To get more in the weeds with her about cryptocurrency, blockchain, and the rest, just search YouTube for Amanda B. Johnson. Or if you have more time, search Amanda Billy Rock. Subscribe to this podcast at yourmoneyyourwealth.com through your favorite podcatcher or on iTunes, where you can also check out our ratings and reviews. And remember, if you've got a burning money question for Joe and Big Al to answer live on Your Money, Your Wealth, just email info@purefinancial.com or call 888-994-6257. Listen next week for more Your Money, Your Wealth, presented by Pure Financial Advisors. For your free financial assessment, visit purefinancial.com. Pure Financial Advisors is a registered investment advisor. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the securities or services discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full and informed investment decision.